This week we got some housing data. Here's the headlines from the week that passed. Let's start with retail sales. They're up 0.7% for the month of March, which is much stronger than the 0.3% we expected. It's at 4% year over year, up from 2.1%. The consumer is way stronger than we anticipated, and the bond market did not like that at all. So it was a sharp sell-off right after this report came off, and rates increased. So a little tip, if you want rates to come down, stop shopping. CoreLogic is telling us that rents are up 3.5% month over month in the month of February, and that is much higher than the 2.6 we got the previous report. This is the highest year over year level we've had in 10 months. Existing home sales in the month of March are down 4.3% month over month, down 3.7% year over year. The median home price came in at $394,000, which is up 2.3% month over month, up 4.8% year over year. Inventory sits at 1.1 million, and that is up 4.7% month over month and 14.4% year over year. 29% of all sales in the month of March went over list price. That's up from 20% of the previous month. First-time home buyers made out 32% of all sales compared to 26 last time around. Cash buyers are at 28%, down from 33%, and investors are at 15%, down from 21%. It's important to know here that cash buyers and investors are still out there in numbers. Their market share just decreased. Housing starts fell almost 15% in the month of March. That is down 4.3% year over year. Single family starts, which is the most important, fell 12.4%. They are up 21% year over year. Building permits, which tells us future supply, fell 4.3% in the month of March. That is up 1.5% year over year. Single family permits fell 6%. That is up 17.4% year over year. Completion fell 13.5%. Single family completion fell 10.5%. Bottom line here, we might see some easing on the rent going forward, but with the lack of supply coming into market, we are not seeing houses prices decrease. Of course, we got some comments from the Feds this week. Jerome Powell came out and said he's not confident inflation is hitting that 2% mark, but we are appropriate where we are, so maybe no hikes. But later in the week, New York Fed President John Williams came out and said, if we're not where we need to be, I'm not taking hikes off the table, and I have no urgency to cut. So that rate cut in June, off the table. July is looking more and more off the table, but earlier we did say the cuts are going to come later in the year, so let's hope for that. Purchase applications are up 5% week over week. That is down 10% year over year. Refis are up 0.5% week over week. That is up 11% year over year. Rates went from 7% to 7 1/8, and that is up 0.75% year over year. All right, enjoy your coffee. Have a great weekend.